Welcome to the Deep Dive. Today, we're really getting into Wipro Limited's latest numbers, looking at their Q4 results for fiscal 25 and, what the whole year looks like.
Yeah, exactly. And we've got quite a bit to work with here. The earnings call, transcript and audio, their official financials, the press release, data sheet, regulatory filings.
It's a full suite.
Pretty much. And our goal today really is to go beyond just listing the numbers. We want to pull out the key insights, what's really going on with Wipro's performance, how are they seeing the current economic situation.
And what moves are they making? Their strategy.
Exactly. The aim is to give everyone listening a really clear, sharp picture of what's important here.
Okay, great. Let's unpack it then, starting with the headline performance figures. Q4 IT services revenue. Looked like a small dip, 0.8% sequentially in constant currency.
That's right. And interestingly, that was actually inside the range they'd guided for.
Ah, okay. So no big surprise there then.
Not on the Q4 number itself. Now, looking at the full fiscal year, FY25, IT services revenue did decline by 2.3% in constant currency overall.
Right. A decline is, well, never ideal. But you mentioned profitability tells a different story.
It really does, and this is where it gets, I think, quite interesting. Despite that slight revenue pressure, their operating margin in Q4 actually went up, expanded to 17.5%.
Wow. Okay, that's a 1.1% jump compared to last year.
Exactly. And for the full year, FY25, they still managed an operating margin expansion of 0.9%.
So even with revenue slightly down, they're becoming more profitable. How are they managing that? Better cost control, different mix of business?
It suggests really strong operational efficiency, definitely cost management, but maybe also, like you said, a shift towards higher margin services. It looks like a deliberate focus on profitability, perhaps over just chasing top-line growth, especially given, the wider economic uncertainty.
Makes sense. And that seems to fit with the net income figures, too.
It does. Net income was up 6% quarter-on-quarter in Q4, and for the full year, a pretty substantial 19% growth.
19% growth in net income for the year. That's quite something.
It is. And another really strong number is their free cash flow for the year. Came in at 118% of net income.
Whoa, 118%. That's really strong. Shows they're converting profits into actual cash very efficiently.
Extremely efficiently. Speaks volumes about their working capital management. We should also mention the bookings. Total bookings for FY25 hit $14.3 billion.
That's a solid number.
It is. And significantly, they specifically highlighted winning 2 mega deals during the year.
Mega deals, so the really big ones.
Exactly. Contracts over a certain, very large threshold. It shows they still have that muscle to land major long-term projects.
2 of those in 1 year. Especially with the revenue headwinds we mentioned, that definitely signals strength in that large deal space.
It's this interesting mix, isn't it? Slight revenue dip, but better margins and these big wins. It points to a very deliberate strategy.
Maybe focusing on fewer, bigger, more profitable engagements?
Could be part of it. It certainly warrants looking closer at their strategic priorities.
Okay, let's do that. They talked a lot about consulting-led AI-powered solutions. That seems to be a major push.
Yes, definitely. They're positioning themselves around that intersection of industry knowledge, consulting, and AI. And they say it's resonating well with clients.
Any examples?
They mentioned Pacific Airlines choosing Wipro. They're using Wipro's TOPS platform to modernize crew management and operations. And AI is a key part of that, future-proofing their systems.
Right, applying AI to core operational challenges. Makes sense.
And it's not just the tech, they're also focused on people. The Wipro Leadership Institute, getting top performers into client-facing roles, a new sponsorship program.
Investing in talent, why is that so crucial right now, do you think?
Well, in IT services, your people are your product, essentially. Developing leaders, putting your best talent in front of clients, it builds stronger relationships, better delivery, it's fundamental. And sponsorship programs, they help with retention and building a more supportive culture, too.
Good point. And sticking with future growth, generative AI. They gave some interesting examples there, too.
They did. A tourism solution in Thailand was one.
Okay.
And another one, which I thought was quite concrete, was using Gen AI for predictive maintenance in a big European city. Using AI agents to spot pipe aging in critical infrastructure.
AI agents checking pipes. That's a very practical application, isn't it? Moving beyond the hype.
Exactly. It shows real-world, problem-solving, tangible value. That's what clients want to see.
They also mentioned a win in managed security services, InfoSec.
Yes, with a big multinational engineering firm. What stood out there was the use of their own AI platform, WeGA Studio AI.
Right, using their own tech.
Yeah. to automate processes, improve agent productivity. They're targeting, I think, a 15–20% efficiency gain there. So AI isn't just for client solutions, it's for their own operations too.
Smart. And one more on Gen AI partnering with a U.S. utility company to set up a Gen AI Center of Excellence.
That feels like a really strategic, long-term play. They're building an end-to-end resource planning platform for things like logistics, power management, asset health, complex stuff.
So building deep expertise and reusable assets in that space.
Precisely. A dedicated COE lets them innovate faster, build specialized skills. That could be a real competitive edge down the road.
Okay, so lots of positive strategic moves, but clearly there are challenges too. You mentioned the macroeconomic uncertainty earlier.
Yeah, that's the big shadow hanging over things. It's making clients cautious, impacting spending decisions, stretching out project timelines.
The CEO mentioned tariffs as well, uncertainty around those.
You did. Specifically regarding China, seems to be adding another layer of caution. It's leading some clients to pause or delay big transformation projects. He actually cited an example, a large SAP program in the consumer sector got put on hold.
Ouch. That's a concrete impact right there.
Definitely.
And what about specific regions? Europe seemed a bit challenged. Revenue was down for the year, though Q4 was slightly better sequentially.
That's right. Europe saw some degrowth in FY25 overall. They mentioned project ramp downs, delays impacting margins, particularly outside their Capco business.
But signs of life in Q4?
A little bit, yeah. Sequential positive growth. And they've put new leadership in place there. They talked about a strong deal pipeline, including that big Phoenix deal. So they sounded, cautiously optimistic about gaining momentum there.
Okay, cautious optimism. That seems to be the theme. And it's reflected in their Q1 guidance for next year, fiscal 26.
It is. The guidance for IT services revenue is between $2.505 billion and $2.557 billion.
Which translates to?
A sequential decline of between 1.5% and 3.5% in constant currency.
Right, so definitely signaling that the uncertainty isn't going away overnight.
No, absolutely not. And they're also flagging potential pressure on margins in Q1.
Ah, okay. Why is that?
Well, the weaker revenue environment itself puts pressure on margins. Plus, they mention the impact of cost takeout deals and vendor consolidation efforts by clients. Those sometimes involve, tougher pricing initially.
So a bit of a margin squeeze potentially in Q1.
Potentially. But they also said they'll work hard to keep margins within a narrow band using those operational improvements that work so well in FY25.
Right, doubling down on efficiency.
Mm-hmm.
Another challenge they mentioned was the smaller and medium-sized deals not growing as fast as the mega deals.
Yeah, that's a really important point. Landing the mega deals is great for the headlines and long-term stability, but you need a steady flow of those smaller and mid-sized projects too.
Why is that?
They convert into revenue faster, generally. They provide a more consistent baseline. If you rely too heavily just on the big ones, your revenue can become quite lumpy, quite volatile.
So they need to win more of those bread and butter deals to smooth things out.
Exactly. And they acknowledge that some client-specific ramp downs happened in Q4, and just generally, client sentiment got more negative during the quarter because of the macro picture and the tariff worries, all feeding into that cautious Q1 outlook.
Okay, let's quickly cover off some other financial details. IT services is still the main engine, right? Dwarfs IT products.
Oh, absolutely. IT services is the vast majority of their revenue.
And geographically, America's still the biggest chunk.
By far. Around 63% of revenue in FY25 came from the Americas, then Europe, then APMEA, Asia-Pacific, Middle East, Africa.
Okay. And headcount, you mentioned they're focusing on talent. Did the numbers change much?
There was actually a slight increase sequentially in headcount in Q4 after a few quarters of decline. Total count ended at 232,614.
Interesting. A slight uptick. Maybe hiring in those strategic AI and consulting areas.
That would be the logical assumption, yes. Aligning headcount with those growth priorities, though they didn't break down exactly where the growth was.
Right. And currency exposure, obviously big, with lots of revenue in U.S. dollars, pounds, euros. Exchange rates matter.
Definitely. Fluctuations there can impact the reported numbers quite a bit.
And just housekeeping, the interim dividend they declared, that's the final one for FY25.
Correct. The euro 6 per share declared back in January is the final dividend for the year.
And they did a share buyback last fiscal year, FY24.
They did, yeah. Which reduced the total number of shares outstanding, generally seen as a way to return value to shareholders, potentially boosting earnings per share.
Okay. One last thing before we summarize analyst recognition. They seem to be getting nods across a whole range of areas.
Yeah, quite a broad list. Gen AI services, life sciences, cybersecurity, specific industries like Utilities, oil and gas, telecom. Also things like analytics, cloud services, sustainability.
That must help, right? Having third-party validation.
Absolutely. It builds credibility, validates their capabilities for potential clients. It's definitely a positive factor in winning new business.
Okay, so let's try and pull this all together. If you had to boil it down, what are the main takeaways for our listeners from this deep dive into Wipro?
Well, first, I'd say it's crystal clear they're navigating some pretty choppy macroeconomic waters, and that's directly hitting near-term revenue growth. No doubt about it.
Okay, challenge number one.
Challenge number one. But takeaway number two is, despite that, their focus on operational efficiency is really paying off. You see it directly in those improved operating margins.
Doing more with less, essentially.
In a way, yes. Or at least doing things more profitably. Third takeaway, strategy. Their big bets are on those large deals, boosting consulting and going hard on AI, especially Gen AI. Plus, investing in their people. That's the long-term growth engine.
Right, planting seeds for the future.
Exactly. Fourth point, Europe. It's a mixed bag. Challenges, yes, but also signs of potential recovery with new leadership and some key wins. One to watch.
Okay.
And finally, number five, client caution is real. It means Wipro needs to be super close to its clients, flexible, adaptable. Partnership is key in this environment.
So navigating headwinds, driving efficiency, strategic bets on AI and big deals, keeping an eye on Europe, and focusing on client partnership. That sums it up nicely.
I think that covers the main points, yeah.
All right, so as we wrap up this deep dive on Wipro, maybe one final thought to leave with our listeners. Considering everything we've discussed the economy, Wipro's strategy shifts towards AI and consulting. What do you think are the biggest opportunities and maybe the biggest risks for them in the year ahead? Something to mull over.
That's a great question to ponder.
Definitely food for thought. Thanks for joining us on the deep dive.